In this video, we're going to be looking at how the 2016-2017 budget have specific policies that will impact strong and sustainable growth. And first of all, it's important to mention that the mildly contractionary nature of the budget, again, could have negative implications for strong and sustainable growth. But because it is only a mildly contractionary budget, it's not a big issue for reducing strong and sustainable growth. There are, however, many discretionary policies that will help to boost economic growth within this year's budget. The first one, and the main one that you will focus on, is the government's 10-year enterprise tax plan. What that's basically doing is it's reducing the company tax rate to 27.5% with companies of turnover of less than $10 million. So last year what they did was they reduced the tax rate to 28.5% for businesses with revenue of less than $2 million. Now they've changed that to 27.5%, so gone down another 1%, and they've increased that to $10 million, the amount of assets you're allowed to have. The company tax rate is going to be lowered for all businesses to 25% by 2026-2027. So they're basically lowering the company tax rate, which should help to boost investment spending. So what essentially happens is firms get to keep more of their profits after tax, and therefore they're more likely to invest. And we'll look at that a little bit more in the next slide. In recognition that not all companies are what we call incorporated businesses, and an incorporated business is basically one that sort of pays tax at the normal company tax rate, there are some businesses like sole traders and partnerships that basically pay tax just at the normal income tax thresholds. So they will pay tax like anybody else, where they'll pay, if they earn up over $80,000, they'll pay more tax, and then if they earn over $180,000, they get pushed up into the highest tax bracket. Because some businesses are unincorporated businesses that don't pay the normal company tax, they've allowed them, any business with an annual turnover of less than $5 million will also get a tax discount of 8%, up to a total of $1,000. So basically any big business earning less than $5 million will get a tax cut up to a value of about $1,000, which will also help them and encourage them to grow and boost their investment spending. Tax cuts encourage investment spending as businesses get to keep a larger share of their profits. It's really important that you linking this policy to, first of all, defining the goal of strong and sustainable growth, and then linking it to the goal by saying that lower taxes will boost investment spending. They also mean businesses are more likely to hire more people because they've got more cash flow, and that will reduce cyclical unemployment. So you really want to target particular sectors of the goal. It helps to reduce unemployment because they will invest more, which will create jobs. It helps to boost investment spending, which will create additional aggregate demand and create additional production and consumption and jobs within the economy. Any investment in new machinery and technology, again, will help to boost productivity and therefore could help our long-term growth rates and help to avoid inflation. So if businesses are getting these tax cuts and they're going, all right, we've got more cash flow, we can afford to invest more, then that's going to lead to better technology, better infrastructure in the future, which will help to reduce, which will help to boost our productivity and reduce cost-push inflation. So if they use these tax cuts to invest in new capital equipment, it has supply-side benefits for boosting our productive capacity in the long term. So that's really important that you can link it to the goal really well. Explain that they're cutting the tax to 27.5% for businesses earning less than $10 million now. That this will encourage businesses to invest, which will boost aggregate demand in the short term. It will create jobs in the short term. And in the long term, the investment in new technology and new machinery should help to boost our productive capacity and boost productivity and allow for sustainable growth. So really clearly linking it to the goal. They're also, another thing they're doing is they're continuing the asset write-off scheme. So basically last year they announced that any business with turnover of less than $2 million could claim assets up to $20,000 and immediately claim them as a tax deduction. Now they've increased that. Any business earning up to $10 million will be able to do this. So basically what that happens is if you're a business that's, say, making $1 million profit, you buy a $20,000 asset, that will help to reduce your effective tax liability by 20,000 times the company tax rate, so around $5,500. So effectively buying this asset worth $20,000 is really only costing you about $14,500 because you're getting $5,500 back. So asset depreciation allowance, the quicker we allow businesses to depreciate their assets, the more they get back in tax and the more they're encouraged to invest. So if you're using this initiative, you've still got to link it to the fact that we invest in new machinery and new infrastructure that creates aggregate demand in the short term, and it also boosts our productivity because we're using better machinery, better technology in the long term. and better capital equipment. So that will help to boost our productive capacity. Other thing within this budget that was good for growth is the tax cut for middle income earners. So if you get a question that's just an overall impact on growth, I probably wouldn't choose this one if you're just doing one. Basically, they've increased the tax threshold for those paying 32.5 cents from 80,000 to 87,000. So if you're earning $87,000, you'll only pay 32.5 cents on that extra 7,000, as opposed to paying 37 cents. This is good because basically what happens is it should boost consumption spending because people will have higher disposable income, and that will lead to boosted aggregate demand. That will help to create demand for products and increase production. So to increase production, business will also hire more people, and that could help to increase the derived demand for labour and reduce cyclical unemployment. So it's basically just a tax cut, 4.5 cents for $7,000 worth of income. So 4.5 cents times 7,000 works out at about $325. Consumers will have $325 more, and therefore that's more money to spend. A couple of policies from this year's budget that might hurt growth. We've got the excess tax on cigarettes, which will reduce consumption of cigarettes. There's expected to be job cuts worth $1.4 billion for public servants. And they're also freezing Medicare, which will make it cost more to go to the doctors, so people might have less discretionary income for other things. But mainly focusing on the policies that are going to boost economic growth. Thank you.